Hello everyone, a very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of Daily Stock, we are going to look at the annual report of a very interesting company, and more so because we have the weekend coming up, and we will be consuming various offerings by this beverage giant. The name is Diageo, and more often than not, we use some of the offerings of this company. So most of us are quite familiar with the company, or at least with its brands, the liquor brands. We are going to see its annual report, which was released last week, and we will be see how things are shaping up for the company, how the past has unfolded, to get a good sense of the prospects of the company. And afterwards, we will also take a look on the technical side of the story to see if there are any emerging opportunities for us to exploit. Now let us head to the JForex for the newly released trading platform from the Dukascopy Bank SA to take a glance on the share price. This is the weekly chart, and if we look at the long-term prospects of the company, it has steadily risen for the most part of last decade, and after the spurt, it tends to go sideways for a couple of years and then pick up pace again. It started to rise from 2016 onwards, and it continued its journey higher till 2019. Afterwards, it saw this deep correction, and since then there is no looking back, with shares doubling from this low of 2020 to these highs of 2022. But from there on, again, the company has now started to go sideways, and the picture is not really likely to change anytime soon. But in the meantime, we have to consider the fundamentals to keep an eye on the company's share price, and as and when things start to turn around on the technical side, and if the fundamentals are also supportive, we can of course take our chances to capitalize on these strong fundamentals as well as the technicals. Now let's go into the details of these report, the financial statements from the company. First, we consider the consolidated income statement, and the clear trend is of the rising revenues in last 3 years. The revenues for the company have only gone up and up, and this time around, for the year ended 30th June 2023, we have the total revenues at 23.515 billion UK pound, the British pound, and even if we look at the net sales, the number is showing quite robust growth of year on year, almost close to the 10 percentage point for this year, the financial year ended 30th June, compared to the financial year ended 30th June 2022. The operating profit is also showing a rise, though the growth is lower, and profit for the year is also substantially higher, almost 10 percentage point, now attributable to the shareholders, and the net income has gone up. the EPS is higher this time around for this year. And here you can see the increase in EPS, which is quite good, almost higher than 15 percentage point, the growth in EPS. Coming to the balance sheet, the company's balance sheet looks strong with its assets and liabilities on sound footing. The only thing is this cash flow statement showing decrease in cash positions. The cash and cash equivalents has continually gone down for last three consecutive year. But when I was looking at the final points, the fine print of this cash flow statement, I realized that this reduction in cash and cash equivalent is because the company is opting for share buybacks, and also it is paying substantial dividends, so it is using up the cash for that purposes, and as a result of that the company's cash, that is liquid asset holding, is on the lower side. But still, with the cash holdings, cash equivalent holdings of more than 1 billion British pound, it is well prepared to meet any contingency requirement, any immediate requirement. So this is the takeaway from these financial statements from the company, where we can see that the company's financials are strong, the business is doing quite well. There is not much of an worry to be worried about from the business point of view. For the company, the business is strong, and that means we only have to look for the optimum entry opportunities whenever we feel that now the risk reward ratio is in our favor and also the momentum is on our side. That is the time when we can get involved for the investment in the company's shares from the short to long term. Let us go to the JForex 4, and if we look at the share price trajectory from the long term perspective, then you can see that for last year and a half the company's share price has been inching lower, but it hasn't really declined much. It is consolidating with bearish bias, and you can even say that this is a corrective phase. But since we don't really have formation of higher highs and higher lows in the long term, I think it will be better for us to wait it out for things to stabilize, and maybe after a few months or maybe after a year we will have a different formation which might provide us a better opportunity to get involved in the company share price for the long term investing. But right now, the things are looking slightly bearish, and it will be better for us to hold our horses and sit on the sidelines. But in the meantime, of course, we can also keep looking for short term opportunities as and when things look good enough, we can go for investing in the short term to medium term horizon, and we can try to capitalize on the opportunities generated therein, even if we have to wait for the investing investing from the long term perspective. Is the daily time frame chart, and here also the picture is not really much different, and it is still making lower lows and lower highs. So here also from the medium term perspective, we have to adopt a wait and watch approach if you are looking to invest. And for short term traders, the momentum is also downward with this continuous formation of lower lows and lower highs. So we will have to allow it a couple of more sessions to stabilize, and only when we have formation of higher highs and higher lows, we can then think about getting involved for a new long-term long side trade, because even if the fundamentals are looking all right with growth in the company's earnings and net profit, still the momentum in the share price is still negative in the short term, medium term, and the long term. So it will be better for us to sit on the sidelines, allow the things to stabilize, and as and when things start to turn a corner, given that the fundamentals are supportive of a long trade, we can indeed go for a new trade positioning with the expectations of the company share price to trade higher. So that's my outlook for the company's share price with different time horizons in mind, and we will have to be patient here. There is no immediate opportunity to trade in the DIGO stock, but of course the optimum opportunities are likely to arise in near future. So let's see how things unfold in the next week once we come back for trading after this weekend. See you next time around on Monday. Thank you all for joining in. Have a fabulous day and weekend. Goodbye.